So we're going to run through a list of what I think are the most poignant ideas today as far as stocks out there today. You're seeing a lot of different moves go on today, and just for clarification, people that are seeing this video is for people that are interested in stocks and which stocks are moving, and they're interested in actionable ideas and actually learning what it takes to be a consistent, profitable trader. We will cover certain stocks. We'll talk about actionable points in them, as well as at today's end of today's video, I'll go over most likely just the NASDAQ, because that's what's really going to lead us here. And at the end, I'm also going to go over the Philadelphia Semiconductor Index, the SOX as it's known, because that's going to be an issue as well going forward. Everything's going to be led by those two indexes. But let's get into it. And let's just start right here. So AMC I was asked about. And let's get rid of this for a moment. Okay, so these are key levels that we came up with that when we traded this last time. And we were in and out of this, and we did pretty well with it. And what you're seeing here is you're seeing this break. And this is a weekly chart on it for those that aren't aware. So, and I like looking at different time frames. So just look at this for a moment. You can kind of see what's happening here, right? See that now? So you're breaking above this, which is excellent. We ran up here, we rejected here. I believe this is, we talked about trimming when this happened, and you can see what we're doing. But look how the 771 is just being respected. I mean, the market breaks down. This thing goes nowhere. This stock is staying in this little range above major support while all this is going on. And we have a bad market right now. I mean, it's a tough tape out there, and we're going to get into that. So, I don't think this company's going to go under. I don't think that I think they're going to be around. And if that's the case, this is a really interesting spot to keep looking at it. Now, we did reject this previous spike, but let's see what happens here. And I still like the 771 level. So for people asking me, this is where you start looking for your triggers on the buy it. And if we break below this level, this is where you sell it. I mean, it gives you a 70-cent stop. It's a really nice place to enter. Oil is just going to be on fire. And, we'll get into the XLE in a little bit here. But oil is just going to be absolutely on fire, and you're going to see this continue. But this break, see this break right here of this 1230 line? Look at how it acts here. And we'll throw in a couple more of the bells and whistles of the moving averages to get them in here so that you can see a little bit more. But you see what's going on here? See how we're pushing higher, and we're just respecting this channel? And we talk about this all the time, but you can see here that as soon as you broke here, you flipped. And also, look at this one. Right? So people know from watching my videos that when we flip these channels, it usually means we could see a very large move up. Now, let me just collapse this on the side for a moment and look up here. I mean, there's really no reason this isn't going to $14 that I can see. And this is a very simple trade, and I do think it's actionable. And if you are looking at this and trying to figure out, do we see enough volume or not, you drill down into your 15-minute, and then you decide, did we have enough volume? Put a little arrow on this. There we go. Did we drill down into this enough? So, yeah, I think we did. Do we have enough volume? Yes. Usually are trading about 75 every 15 minutes. We're trading 4 to 1, 5 to 1 on this break. That tells you you're seeing real volume come in here. And I would take that as a sign that this is something that, look at the space. The space is going to be on fire. This is going to move. And some of these companies are extremely leveraged. So when they move, they move. Like Oxy is extremely leveraged for people that are interested in this space and that are interested in these trades. So, and especially the oil sector. But let's just go through this so you can see. See how we're just breaking, and now you're going to get to a point where you're going to have filled the whole gap on Oxy. So these can have really powerful moves, especially the ones that are very leveraged. And just look at what's going on here. And when you start seeing 5-year breaks, you have to understand that these breaks, they're not something that they're not something that turn fast. In other words, when they break like this on a 5-year chart or a 4-year chart, they usually go higher. And they usually continue this trend. So you can see here on Oxy, there's really no reason on the weekly chart that we don't get the 37. So if I was interested in this space and think that oil is going to go up because of geopolitical reasons or just because it's going to go up, this is definitely something to consider. And I would look at this and I think this could get to $37, $38. GE is getting a ton of action. And I also think you're starting to see money come into the more of the industrials and more of the beaten down names. There's a reason for this, just so people are aware of this. And it's a reason why tech's been taking it on the chin. When rates go up, the first people to get hit is tech. It's always tech. Doesn't mean that it's not going to come back, but tech always comes in when rates go up because their borrowing rates are always higher because of the types of companies that they are versus the industrials. So they're usually the ones that get whacked on a treasury move. Conversely, when that yield drops, and I do believe that it will drop, when that yield drops, tech's the first to rally and the strongest to rally. But if you're looking here, and you're looking at GE, there's one level here that I'm looking at, and this might actually go in the newsletter. And the newsletter, there's a link in the description and bio for the newsletter. If you're interested, we go over stocks and indexes, and it's free. But it comes out about 3 times a week: Sunday, Tuesdays, Thursdays. But what you're seeing here is you see how you're breaking this. Look how you come under, right? Undercut it and then go. Now this is a 200-week moving average. That means this took 200 weeks to develop. That's not going away. And now for the first time in I don't know how many years, probably back to here, for 6 years, it's the first time we have a higher high. So not only that, now you have a right shoulder reversal pattern. Well, this might just be something to, it's going to be a slow mover, but this might just be something to look at adding to with a break below this. If you break this, you have a dollar stop. You get through 15 and we could just keep on going. This could be a big stock this year and something that I would definitely keep on my radar. And if you look at the daily, we'll just drill down into this really quickly. You can see these are the lines and this is what's going on today. And this rejection is not, too troubling. I mean, tech's been beaten down, and if it rallies today, people are going to move their industrials out. So FSR was one that I gave in the Sunday weekly list of top 10 stocks that I thought could really, power and move, and it did just that. But let's just review what's happening right now. So you see this FSR line, this upper trend, we flipped it, and what did we do? We did exactly what we do with these. We went parabolic. So then you sell into that, and then you set the level. Now the level got set at 29.27, and then what happened? We reject and can't. They open us at the high. We make a lower low. That's all she wrote. And then once you broke this, you know that you're going to come back down and test this level. I mean, you know that the probability, let me rephrase that so you understand this, because I do want to do this to educate. So you fail here, you open here, and you take out this lower low. This is a clear sign that we could go here. Doesn't mean we're going to break, but we break on that day, right? Once you break and close below this, you're going to go to the next level of support or to the lower trend line. One of those two things usually will happen, and that's exactly what transpired here. But look what's going on. We broke here, and now we bounced. And maybe we bounce and hold here. A close below 21.57 would be concerning. Other than that, you could be looking at 15-minute charts and playing this and batting it around. This is not something that, just by looking at this right now, this is not something you need to jump into. But you could trigger here fairly easy. Let's get rid of these indicators. And let's get rid of these lines. Let's get rid of all segment lines for a moment. And this is a 15-minute on FSR. But you see this? And then you have this one as well, which is even more prevalent to me. Right? I mean, look how we opened today and hit that line. That's why I love when people tell me, they don't use technical analysis. But we went right to that line. Look at that. It's perfect. So, you could use this as your trigger. And this is why we always leave our support lines in, right? Look at the undercut. And then what did it do? It rallied. So somebody that knew where this was the line and waited for this as their trigger, let's see what the volume was like. Yep, it was a perfect trade. Look at the line, look at the volume, above average volume. We reverse, and then we go. So let's just keep running through these. But FSR, that we break that, I would definitely be on my list of stocks to look at. So, and this is something that I was asked to look at, and I'm not crazy about it. I'm just going to explain why. So this is CAN, and I really am going to have to start using caps because the lowercase, for some reason, I don't know if it's OCD, but it really bothers me. So I'm not crazy about this. I think that the resistance is amazing, how resistant it is to not dropping. And you need to look at that, right? So the relative strength of a stock is very easy to figure out, isn't it? All we do is a very simple test. Where am I at on my moving averages corresponding to the index? And this is going to be, their moving averages are going to be above it. Therefore, this is stronger relative strength. It's literally that simple, and it's a great, quick guide to determine where you're at on a stock. But here's what bothers me about this. My base is all the way down here, and I still have a ton of risk on. So I need to watch what's going on. And I have these huge bars and huge swings. So my range on this is between here and here. And I'm not sure that I want to play with this right now and have a 10-point range. And this is very volatile. So I would let this sort itself out. Where would I get interested in this? Flip this 2578 level on huge volume and maybe have my attention. Pack B, this is from previous. Let's get rid of all annotations. It'll just be simpler. And we'll just start over. And we'll use caps. Okay. So Pack B, this really had a huge run and it undercut. But there's a lot going on here just by looking at it. And if you get frustrated with how quick I can point this out, some people talk to me, or I get texts like, how do you know these lines so fast? I've been doing this over 20 years, and based upon that, you just get good at this, and it's just repetition more than anything. You can even see this one right here, right? So you get good at this over time, and it's just a process. But let's look at this just solely what's going on here. This is a perfect double bottom, okay? And it's just on price. It's all we're talking is price right now, okay? And I'm not saying to buy. I'm saying that this is what's going on. And this is what makes it a double bottom. So the best double bottoms, or how they're referred to, 2Bs, is when you undercut the previous low. Because it shakes everybody out. And what do? We undercut the previous low, and now we're here. This is just a falling wedge. And as falling wedges are concerned, it's a beautiful one. The deeper and steeper, the stronger the bounce. So right now, I need to get above that level. Now let's throw in some bells and whistles. Okay, let's put the indicators back in. Okay, so if I can get above this level and push, it's going to start using these levels, these moving averages at resistance. But this gives me a great spot to be in because this is your stop, this 28 level. So if I go here and then I reverse and I start moving, this could really go, and you're at a really key level here. This one's not so much. It's not as great as this one. This is more powerful. So let's see what happens here. But I like this Pack B trade as far as a bounce. It sold, it undercut, and I have 3 different levels. And I don't want to get too into it, but I look for a lot going on that would get me into a trade. So XLE, let's just run through this. Very simply, this is what's going on with it. You can see it yourselves, hopefully. So we're breaking here. Now let's go to the pre-pandemic level. You're right there. So you break through this level in the XLE, and your MRO, your Oxy, your ExxonMobil, they're going to keep going. And they're going to keep going forward. So keep that in mind. This could be a much larger move, especially if we destabilize in the Middle East. But you have you got to look at these lines. This is pretty substantial for the XLE. This, you know, I'm not a big fan of UAL. If I was going to play the airlines, I would play ALK, and I'd play JetBlue, JBLU, solely because they have better balance sheets. This is so laden with debt. I don't know how it's going anywhere. I mean, it's really trying. And this is a weekly chart on it, but it's really trying. But I have this flag, but you see how this 5 and this 8 look like they're going to cross? And we did a video on this earlier, this move. This is not something I need to be involved in. I've had my move, you know, and oil prices are going to go up. If oil prices go up, it's another nail in the coffin for airlines. I mean, over 70% of their earnings are distributed that way. So, yes, they hedge it, but it's still a problem. So I'm not a fan of this, and I would just avoid it. Your money's spent in better places. So GME Gamestop, I talked about this today, and I just want to point this out because there's a couple really cool things going on here. So let's get rid of these indicators for a minute, and we can just get rid of everything. Let's just look at this. Just look at price, which is where everybody should start. See this triangle? If you break out of this triangle, your next level is this 141.66 level. Why is that my level? Because it's the high here. I know let's throw in this bell and whistle. And it's also the open here. So the day that this gapped, right, and you were in this and you were hoping that, you know, you stayed in it, you gapped it, opened here. So those people, that's when they get out. Okay, that rallied for them, and now they blow it out. And that's what happened. So now we consolidate, and that's why you're getting this. And now we could break here, and I put this out there. I would keep this on your radar. This is definitely something that if this breaks, it could really push. And then we only really have this level and here. I mean, you can get to 211 fairly fast on this break. So I put this in the newsletter today. And I believe I mentioned it on Twitter. And there's a link in here in the bio and descriptions to follow us on Twitter. And I do give out a lot of actionable ideas and education. So if you look here, this is what attracted me to it. I would have liked to have undercut this and shaken everybody out. But strong stocks don't give you the best opportunities, right? Strong stocks just don't do that. So what happened here is we got ourselves in a position where we had to make a decision. And that decision was, do we take the shot? And I think the risk versus reward here is very good. So I simply set this out in the newsletter that, you know, I would be a buyer of 145 or better. And I would just use the low of the day as my stop, which is a wide berth stop. But you're going to need that in an environment like that. You're going to need a lower stop, right? You're going to need something wide right now because we're bottom fishing. And the probability of these trades is lower, but the reward is substantial. You know, we can get back to this 203 level in this trade, and I'm right against major support, and I'm right against this lower trend line. So I really do like this down here. Now this Boeing is one that we threw in there at 232, and we're just bouncing around in these levels, holding here and knocking around. I see no reason to do anything with it. I'm in this. I'm long. I'm just going to hold it. There's nothing to do. Snow, this is a substantial bounce. I'm going to be honest. I don't get it when I read that research report, or earnings report, rather. You know, they lowered guidance. You know, I mean, it was very clear. I mean, they kind of alluded to it, but they didn't really talk about it too much. So what you see here is you're really encapsulating this other bar, and you're having a bullish engulfing if we close here under the bottom of the channel, which would lead us to possibly push to this 292 level. So that's definitely interesting. And let's just cover two more really quickly, and then I really want to get into the Qs because that's really what's going to lead the market here. This ZM, you know, this was a nasty. And we came down, and people are getting all excited today, and they want to be in this and buy it. Look, all I've done is gone to the 200-day moving average. I would not be a buyer of this. This looks like these are all going to start rolling and getting nasty, and this had a big move, and I have all this I have to get through. These red bars, when they open and close like this, it's about as bearish as you can get. So this needs to develop, get above the 200, get above the 50, and then I might have interest. And finally, if the SOX holds, this is exactly where you buy NVIDIA, right? And I'll say that again. If the SOX holds, this is exactly where you buy NVIDIA. Okay, we have been holding this line forever. I mean, it actually goes all the way back to here, right? And look at this. I mean, this is just a huge base. Now we've undercut support, right? Shaken everybody out with a sub 500 price right to the 200-day. And if you're up here, you're at what, 10% just to get to the 50-day? Now, this is really interesting. But if I won't do this with all of them, but I can almost guarantee by eyeballing this, yep, see, like, and you're going to have a hard time seeing this unless I get rid of all these annotations, but this is important, so I'm going to do it. So let's get rid of that, and let's get rid of everything except bars. Okay, let's get rid of all the other indicators for a minute. Let me do it this way. This will be easier because I just want you to see the one indicator for a moment. So these are Bollinger Bands, and these are I use second standard deviation. Some people use them tighter. You've moved so far, so fast to the downside from here that this is due for a bounce. And this is really powerful. These act like slingshots. You can see here when they hit, right? Not the tighter ones, but the wider ones are the ones you really want to look for. And you can bounce to the mid-range of these fairly quickly. So this is definitely something that would be on my radar. And let's just get into the stocks and what's going on there because it's important. So I'm just going to leave this up because this is really just about price. So here's what's happening. We are up here. We undercut this low, and then you can see it. And now we're below this lower end of the band. And when we undercut this, right, and this is your downward trend line from your falling wedge, you know, this line will match up here, you can bounce right to here or 420. And we've undercut that. As long as we close above that, we're good. And right now, you can see by this dotted line, we're set to close above it. If we close it below, you got to be a little concerned. And then finally, let's get into this, the Qs, because this is really important. So you came right down to this 303.81 level that we talked about, right? We came within $1 of it, and we didn't break. And what we need to do here, and let's remove the segment line for a minute, and I want to throw these in. So just look at what's transpired here. We're trapped, okay? I issued what I considered a bottom alert when we got to this level, and I'm going to show you how I got there. But if you look just here, you should be able to see this, right? And I understand that, you haven't been, I don't know how long you've been doing this, but if you can see that line, that's pretty prevalent. I mean, I have this downward trend right into this, and I'm trapped right here, and I have this Bollinger Band. Well, that was very simple for me to look at that spot and go, I need to pay attention. And let's get rid of the Bollinger Bands now because we don't need them. And let's just look at price and volume, okay? And you can really see, this is just a 1 minute, and you can see, okay, we break this level. This level is everything right now. This 312 level, it's everything. We need to close above it. But you can see here, right, when we got down here to this level and we sold off, you can even see it on this. Hold on. Let me just do it this way too, because you can even highlight it even more. This is from before we printed it. But you see this line? I mean, you can see this, hopefully. I'll just draw it this way really quickly. Once you got here on this hourly, that was, and then you just drill down into it. And once you drill down into it, you can see where you're at, and you can see how close you got. And then you just look for a little pattern. There's a couple other little oscillators that I created that I use, but I don't want to get into all that. And then you just have this M, bonk, and then the M breaks, and then it's a clear buy signal. And you go from there, and there's your volume spike. So that's pretty much it. Any questions that you have, please reach out. Any comments that are on here, I will answer. Reach out to me on Twitter or YouTube, and let's just keep moving forward, keep asking questions. My goal of this is to educate people on what it takes to truly be successful as a trader and consistent and profitable. So I'm trying to reach the most amount of people. So if you could do me a favor and click the like button, that would be great, because apparently that's how the algorithm works for me to get this in front of other people.